Hi, this is Elliot Wave Sage. I want to do a market update. Like always, none of this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes only. Okay, so the market's been selling off just as I've expected. Unfortunately, the selling will continue. We saw a lot of things in the market happen today that should be concerning for you if you're on the long side. The bond market erase divergence on the daily time frame, and I can't tell you how important that is in terms of where interest rates are going, and of course the impact on stocks and in the world in general. So we're in a different world this decade, and I also think what this also shows is all cycles come to an end. All good things come to an end. Obviously, the bond bull market is over, and I believe the stock bull market may be over very soon. So here we are, SPY 1212, and a lot of people either have this as a 3, 4, 5, and go, "Ooh, I want to buy the dip," but it's very dangerous because if you look here, this was just a back test of this neckline, as well as this downtrend line, and it got massively rejected. It looks like now we're heading to this 410, and a lot of people expect a nice rally, but I don't think so. I think a lot of your pro trader permabulls want to go long right here at 410, 414. This is your this is everything's normal. This is just a correction. This is, the cycle, the weekly cycle low, We buy the dip, and life goes on, and the market goes higher and higher for years and years to come. So this is where all those folks are going to probably come piling in. And when that happens, I believe that will be the time to do the rug pull. And that's around October 17th or 18th, when all those folks are long. And then it's not just like, oh, we're breaking down. It's like, holy shit, the market opened down here, and there's a huge gap. That's what I think. I mean, this is the type of thing I think is going to happen. So I don't think it's going to happen now. Now it could. We could start gapping down and blow through 410, but I have a feeling this will be defended, this 410, but I believe there will be a massive trap that will be set for people. So we could see something like a 1-2, but then probably another 1-2 right here. We get to here, and we probably come up like that, and then you get that separation lower for the real wave 3 of 3. So that's what I think we will see play out. I believe in this wave 2 will trap a ton of people, more than a ton. And I believe a lot of shorts will be covering here. So this is the best opportunity to reg pull on this too right here. The surprise will be if it just starts happening now, which very well can be the case with the count. So that's the SPY, the Dow Jones. I have it as this again 1 2 1 2. Here you say it's a 1 2 3 4 5, but I don't like that actually. Here we're about to race divergence again to confirm a wave 3, and again you have another downtrend line that's about to be tested. And once that breaks, that should be a nice waterfall down. This is the 1987 pattern. You're just not getting any relief rallies of any significance. It just keeps selling and selling and selling. Waterfall. The triple Qs, now the Nasdaq's been strong. We did have this back test here of this trend line. It failed, it got rejected, and now we're starting to head down. But as you can see, we haven't really got that separation. It's been lagging. It's the last indice to go. And there's a lot of narratives as to why you want to be in tech. They have a lot of cash, and therefore they're earning a lot of money on their cash balances now on bonds. I really worry about that because that cash, if it is going to go into long-term bonds, that means it's not into stock buybacks anymore. Also, I do think that when the selling really gets bad, people sell their family jewels, their heirlooms, anything not bolted to the floor, including your tech stocks. that even if they are going to weather the storm, there'll be such a liquidation event coming that people will need to raise money no matter what, and they will have to sell the best assets, the stuff they don't want to sell because they just need the cash. They have to sell it. So that's going to eventually be why these tech stocks do collapse. Here you can see 1 2 1 2 1 2. It's the market makers are desperate to keep tech alive because once tech goes, then the market's going to rapidly collapse because there won't be any other sector to go to. This is the last narrative left, and people are believing still tech's invulnerable to what's happening, but it won't be. We still don't know what the earnings impact is in Q3, which also could cause it go into free fall. But if you look at this chart, this dish is starting out getting some good separation to the downside. IWM is heading down to the first area, maybe the first index to break the October low, and we should be entering the 3 of 3 here. And if we look, we're about to raise divergence to confirm that 3 of 3 is taking place. Okay, so that's the indices that I'm looking at. Just more downside. Any relief rally will be rejected, just like we've seen. We're finally seeing the futures puke red. They kept trying to pump the futures, and it just wasn't working anymore. So whatever magic was trying to be, conducted is now failed, and we've had multiple opportunities, and now I think whoever's been doing that is just giving up. And now there won't be no more future pumps. So this should open us up for some pretty significant selling now. And again, looking at the Dow futures on the daily, doesn't look good. You still have this divergence. So again, some people could hope to 1 2 3 4 5. I don't think so. I think this will extend and raise divergence. So that's kind of what I'm looking at in the market. So a lot of downside coming. Here was just a nice little bear flag, a cute little bear flag that broke last night. And I was watching this all night. It finally broke, and sure enough, it just kind of, of course, news came out, and I think it'll just keep going lower. So just keep this in mind. I mean, if you're taking the long side of the trade, just know you could be taking a long in a 3 of 3, which is probably the worst time. I do believe we're going lower. But you have to do what's best for you. I can be wrong, right? And I have been wrong on some things. Look at the Nikkei tonight, really taking a dump, broke this low, this pivot here. Looking at the daily, let's look at the weekly trend line here. It looks like it's going to test the weekly cycle from the lows, and we'll see if that breaks or not. Soon. I'm interested. Very strong move to the downside. Again, we're keeping an eye on China, ready in its 1 2 1 2 1 2 moment as well. Then you have Bitcoin. A lot of people, just a connector wave. Again, still looking for this flush down. Oil, could make one more high here in this fifth wave. Or it could be done. It just doesn't, it's tough to say. But either way, it's close to the end of its move before we get a deflationary pullback. Gold looks like it's trying to find this 4 for this 5. Then it has a potential dip buy opportunity. This will probably be my next setup that I see taking place in the market, long gold in this area against the low of 1611. And then silver, it's the same thing, but it's got more downside, unlike gold. Then the bond market, if you guys don't understand what I'm saying about divergence being erased, if we go to the daily here, as you can see, this RSI peak now exceeds that peak. Here's your wave 3, but we're still within a larger degree wave 3. So I had to change the labeling on the 30-year now to be a 1 2 1 2, a 3 4 5. 3, 4, 5. So the question is now, how high can we go? And that's the the ultimate question. And here it's tough to say, but if I look, at a move, I mean, we could be up at 6 7 7 8 when we're all said and done here with this extension. on the first cycle on the long end. And again, it could just continue to extend, but obviously this is not characteristic of a fifth wave, this type of price action. When this 3 ends, there will be a massive pullback in 4, only to find another high. The 10-year is also melting up. A lot of resistance, but if we can get through this resistance, it could turn to support, and that really could open us up for different higher prices. Here is a different count: 1, 2, 1, 2, 3, 4, 5. I wouldn't label this a 1, 2, 3, 4, 5 again because of the divergences. So now it's a 1, 2, 1, 2. This syncs up with now the 2-year. So where could the 10-year go? So fortunately, the 10-year should continue higher, and that should get you to 7 to 9.4. This area 8% in the cycle. I know it seems unthinkable, but that's what these charts are saying. And of course, the 2 years been saying this. We've had this 1-2 labeled all the way back, for months, and now it's finally, given the media attention. But it is just a 1-2, and then this should head up to this area that I've highlighted here to finish the first cycle. So it looks like to me rates are going to be under pressure into the middle of next year. This, should pressure stocks, just like we've been seeing. Of course, dollar index has been fooling a lot of traders, again, trying to short this thing. And it looks like we are in this push higher in Y. And then we should pull back from there in this area. We're almost in. The surprise, what I would think could be a surprise is this turns into an impulse where we have a 1, 2, a 3, a 4, and we make a 5. Okay, so, and then if that happens, then we're going even higher. The VIX is broke out just like we expected. You have a left shoulder, head, right shoulder. We kind of hung around this area, and now we broke out. That should be clear skies up to 26 for the first area of resistance. 28, this area, I would expect a pullback in some consolidation there, and then we'll see what happens. If it can break this 29 level, then it's pretty much clear skies all the way up to 47, which would be circuit breaker level type moves up in this area. So could we get there? Anything's possible, but now we have a higher high sequence with a connector, so I believe 25, 26 VIX is definitely coming this month. Okay, so I just went through the market. That's how I see it, and like I said, the alternative count is it is an impulse, right? And it's not this bearish count. I have like a 1, 2, 1, 2. It's a 1, 2, 3, 4, 5, and if that's the count, then we should retrace very soon at any moment, and we should go back up to 33923. So another 1,000 points higher, but that would fail for the series of 4s and 5s. So that's the other alternative. But we need to really pretty soon, and looking at the SPY breaking this low, it looks like we're heading down to this area, and by the time we get there, divergence should be erased, and then we should be in a wave 3 of some kind. And then I believe what will happen is a trap will be set where we hit this and really bounce pretty hard, and then at some point the trap door is released, and people wake up one day down in this area, and they've pretty much been wiped out. And that's how I think this will be a massive trap for long positions, unless you're trying to day trade and scalp this too and get in and out the same day. That may be the only really good setup if you're brave enough to try that move. So that's how I look at the market. Just real quick, I'll go through some other things. Technology again. Where's Apple at? Apple just back testing this neckline. It's getting rejected. It still hasn't even. It's not even started its correction really. So that's a warning sign. Amazon is a connector. Back tested trend line, rejected. Should make a whole nother leg lower. Google, same thing. It's struggling in this wave 2. Should be rejected in 3. Facebook, again, is in B wave. Should be pulling back at any moment down into 250. Let's see how Netflix is doing. Netflix should be down in the 340, 330s. Tesla almost, should be done its wave 2 at any moment. Will break this 211. Lower than we have Nvidia, of course, in this 2 wave. It looks like that 2 wave is now over with that kind of move. We should be seeing a breakdown come in. And then, of course, Microsoft nowhere close to its area with a lower low sequence, which shows that it should drive lower. So these tech stocks are not anywhere near sell areas. There's also other stocks that aren't where I want it to be. Let's see, Palantir is a good one. Here, Palantir needs to be at 1039, nowhere close. And that's something to think about. Shopify, we need to be in the 40s. We're not there yet. Wayfair is another one. Need to be in the 40s. We're not there yet. Let's take another look at some of these other stocks. We were tracking Roku. So we gave this chart on a live stream at 56, 52. We're just not there yet. DraftKings, we're looking for 23, 21. Not there yet. Robinhood, looking for 887, maybe a little lower. Not there yet. Again, just you notice the theme. Everything, nothing is really breaking higher. Everything's breaking down. How's First Solar doing? Looks like we're in this wave. We probably erased divergence here. Let's go to the 4-hour and see we did. So now we're in a 1 2 1 2. So this was just another 1 2 right here. 1 2 1 2. We're in a 3 of 3. It is now in free fall. And in phase energy is about to go into free fall. So you still got these supported. How's the ARC complex? ARC K, here's your connector, should be in the low 30s. So again, none of these are looking appealing to me. Nothing looks like a good dip buy. So then if we go into healthcare, everyone's favorite Eli Lilly, and that's like the epitome of the indices. So even Eli Lilly isn't even in a buy area yet. If you use this as your connector and you're trying to correct this for a bounce, so I mean you got this massive gap. This is an area. So if the market was trading in these other areas I showed, then it would be more open to a bounce, a longer bounce, and something more sustainable bounce. This is a dangerous area to go long. As you can see, a lot of individual stocks are not really. I would expect them to find support. Like Pod is starting to break down in its wave 5. Let's take a look at some of the others. Like mRNA is another one we can look at here. mRNA, not in our area yet. Even if this is a 1 2 3 4 5, we still need to push down here. So we're just not there yet. Let's see if there's anything else in here. How's Danaher doing? Let's take a look. So Danaher, let's see here. I was looking at that. Let's get rid of this box and draw this again here. So we're getting close, 177. And, just kind of, looking at, Amgen. That looks like 5 up, so that looks like the connector. Just need to change that to a WXY. 1 2 3, 3 up, 3 down. So to me, I would probably label this as a 1 2 and come down, and then V down. So yeah, just not there. Just not seeing these stocks where I want them to be. A lot of talk about staples on CNBC this morning. Just let's take a look at where things are. Tyson ready to break down in this C leg. How's Costco doing? B leg should finish at any moment. Let's look at Pepsi. That was one that I was looking at the other day. Pepsi here, 158, 153. So just not there yet. It's just not there. How's Monster? Looks like looks like we're in bigger correction. May have already peaked in 5 here, and we just need to label it. So may already topped in the grand super cycle. The other one I heard on TV, McDonald's wasn't doing good. I think I was the one that told you McDonald's was in a danger area in the Grand 5, and sure enough, that's what happened. How's Wingstop doing? Needs its final leg lower to 117. So again, nothing is standing out. Starbucks, would like to see it at 84.79, so that's getting there. Let's see here. How's Chipotle? Starting to head lower. How about Lululemon? If I can find it here. Starting to break out of this wedge. It should be about to. So you can see so much downside, potential coming. And then commodities. Nothing really I want to show here. Is once oil starts selling off, those will get hit pretty hard. And financials don't look good either. How's Wells Fargo doing? Starting to make its move lower. How about Bank of America? Here, BAC. Starting its move lower as well. And the WX was, so I think it's something like that. So I don't have anything else. I think that's it. So the market is in a dangerous situation. Of course, it's a fight, and the bulls and the people that want to keep the market supported have used a lot of ammunition keeping tech up. But they're eventually about to run out of firepower because the bond market is just too powerful. It overwhelms the stock market. And look, we're already up in rates again. And again, as a 3 of 3, this can just keep going for a while. And it's almost the reason I don't normally try to pick wave 5 tops for this very reason. The risk reward for me was this type of move in a 3 of 3 would be catastrophic, almost like the end of the world type stuff. So why would I? It's such an outlier, but I think we're watching it happen before our eyes right now. Watching this thing happen, it can rapidly squeeze up, and before you know it, it's at 4.8, and it's up here, and then people are going to be like, "What do we do?" So let's go back and look at our support and resistance. If we come over these two lines, where's our next area? And that's really around 6.87%. So that's probably the next area the market will go to. If we break 516, it's pretty much a straight shot to 7%. And I expect that to happen very quickly, and then we'll see where we are with the chart. So the market has got to pull back here, but it's gaining momentum. And panic is setting in the bond market, and it will end up being a catastrophe because of how quick and how sudden it's how all this has happened. And trust me, there's a lot of dip buyers buying bonds right now in the TLT, and if that move happens, they'll all be blown up, and that's what happens in market crashes. It's not a lot of people avoid a crash initially, but then they try to buy the dip, and then they get obliterated because they don't understand the degree the correction is in the cycle. Correcting a longer term cycle, or like a grand super cycle, and that's what I believe people are setting themselves up for here by trying to buy the dip here. Just keep that in mind. The best thing that could happen to you is we just cut through this, because if we get this 2 wave, it's going to trap a lot of people, and I believe there'll be a lot of commotion, a lot of sadness, and a lot of money lost, because I truly believe if we get this 2 wave, you'll get a lot of people trapped, and the market will open much lower, and there'll be mass pandemonium as everyone goes girl tries to leave for whatever reason, and that's that timing of when that again, what timing are we looking at? Probably around let's see here, if it plays out the way I think, October 16th ish, around that time. So do what's best for you. Good luck, guys. Talk to you later.